You know that moment when you're staring at the chart, watching red candles eat your position alive, and you whisper to yourself, "Come on, just bounce." That moment right there is the single biggest red flag in trading. Not the loss, not the setup, not even the strategy, the hope. Because the second you start hoping, you've already lost control. Look, every trader hits that point. You start talking to the screen like it can hear you. You bargain with price. You watch every tick like it's your heartbeat. And deep down, you know it's over. But you still hold because maybe it'll come back. And if it does, you'll promise yourself you'll never do it again until you do. This video isn't about charts. It's about the psychological moment when traders stop being traders and start being gamblers with confirmation bias. Because once you start hoping, you've given up thinking. And that's exactly how the market takes everything from you. Welcome to Disciplined Trades, where we strip away the hype and rebuild your brain for the markets. Not motivation, not positivity, truth. Because let's be honest, this isn't the first time you've watched price move against you and refused to close. You've told yourself it's just a pullback. You've drawn new lines. You've moved your stop. You've made excuses. And every time you do it, you train your brain to need hope. Not data, not logic, hope. That's the addiction no one talks about. The subtle drug that ruins more accounts than bad entries ever will. In this video, we're going deep. You'll learn the 5 psychological red flags that appear right before traders blow up their accounts and how to reprogram your brain to spot them in real time. We'll look at case studies from hedge funds, classic behavioral experiments, and real trading journals from professionals who've lived this exact moment and found a way to never fall for it again. By the end, you'll understand why hoping for a reversal isn't just bad trading. It's a neurological failure. And more importantly, how to rebuild the discipline that hope destroys. Quick disclaimer, this isn't financial advice. This is psychological reprogramming for traders who are done lying to themselves. So here's the question I want you to answer in the comments before we even start. When was the last time you hoped instead of executed? Be honest, because the way you answer that tells me everything about your future in the markets. Number 1, the silent collapse. Every trading disaster begins quietly, not with a crash, not with a bad setup, but with a whisper in your head that says, "It'll turn soon." This is what psychologists call cognitive dissonance, the clash between reality and the story you wish were true. In trading, it's lethal. Let me tell you a story. London, 1998. Nick Leeson, a trader at Barings Bank, notices his losses growing. He tells his manager it's temporary, a small position. He just needs one more bounce, one more reversal. He hides the losses, adds size, waits for the market to come back. It doesn't. Weeks later, Barings, one of the oldest banks in England, is bankrupt. Why? Because one man refused to accept that the market doesn't care about his hope. Every trader who's ever blown an account repeats the same pattern: denial, justification, hope, destruction. We don't lose because we're wrong. We lose because we refuse to accept being wrong. And here's the truth. The moment you start hoping, your identity merges with your position. You stop analyzing the chart and you start defending your ego. Every tick against you feels like personal betrayal. Every uptick feels like redemption. You're no longer trading price, you're trading self-worth. We've all been there. You know it's true. Number 2, the dopamine trap. Here's where it gets darker. Your brain rewards hope. Neuroscientists at Cambridge found that anticipation of gains releases more dopamine than actual gains. That means your brain literally feels better waiting for a win than getting one. When price moves against you, you're not just hoping, it's chemical survival. You're addicted to potential. It's why traders hold losing positions longer than winners. It's why you'll cut a good trade early out of fear and let a bad one burn your account while whispering, "Please just bounce." Your brain is wired to chase uncertainty because uncertainty keeps dopamine flowing. It's the same mechanism that fuels gamblers. Slot machines, roulette wheels, red candles, it's all the same loop. Casinos figured this out decades ago. They don't sell winning, they sell maybe. And the markets, They're the most sophisticated casino on earth. Except here, the house never tells you the odds. When you feel that rush of maybe it'll reverse, you're not in control. The market is controlling you. So the solution isn't to fight the feeling, it's to recognize it. The moment hope feels good, you're already in the trap. Number 3, the mirror bias. Let's look at something uncomfortable. If you've ever caught yourself saying the market always comes back, you're quoting the loser's manifesto. It's survivor bias in disguise. You've seen reversals that did happen. You remember those because they justify your behavior. You conveniently forget the ones that didn't. It's like listening to someone brag about buying Bitcoin at $200 without realizing millions bought at $60,000 and never recovered. Hope thrives on selective memory, and every time you escape a bad trade through luck, your brain writes a dangerous line of code. Holding works. It's false reinforcement. You were rewarded for breaking rules. So now your subconscious thinks rules are optional. That's the moment discipline dies. And here's what's terrifying. The next time you're wrong, your brain will remind you of that one lucky save. It will whisper, "See, it worked last time." You'll listen, you'll hold, you'll lose everything. The solution isn't to erase hope, it's to replace memory. Review your worst trades more than your best. Burn the pain of the losses into your mind until your brain associates hope with hurt. That's how you rewire. Number 4, the professional's mindset. Now let's talk about how professionals deal with this. Because they feel the same emotions, they just process them differently. Paul Tudor Jones once said, "Every day I assume every position I have is wrong." Think about that. The man who predicted Black Monday, the billionaire who made 62% while Wall Street collapsed. He assumes he's wrong every morning. That mindset kills hope before it breeds. He doesn't need the market to reverse. He expects it not to. And because of that, he's always in control. Here's what that looks like in practice. Before entering a trade, he writes 3 statements. 1, I'm buying because. 2, I'm wrong if. 3, I'm out when. That second line, I'm wrong if, is the antidote to hope. It's a pre-written confession. It turns emotional surrender into mechanical execution. You can't hope when you've already defined your failure. Now compare that to the average retail trader. No written plan, no exit rule, just vibes and faith. You can't operate in both logic and hope. One kills the other. Number 5, the emotional bankrupt. Here's something most traders never realize until it's too late. Every please reverse moment costs emotional capital. You have a limited bankroll, not of money, but of clarity. Every hour you spend in a losing position drains it. By the time price hits your stop, you're not just financially weaker, you're mentally broke. This is why traders blow up after a string of small losses. They're not broke financially, they're broke emotionally. They've spent their discipline on hope. And here's what happens next. They revenge trade. They double size. They gamble their last fragments of sanity because they're trying to buy back the feeling of control they already gave away. That's not trading. That's trauma management with a price chart. You can't fix it with a new indicator or a new mentor. You fix it by refusing to hope. Every time you want the market to save you, remember this. It never will. You are the stop loss. You are the execution. You are the exit. Everything else is noise. Climax. Let me ask you something raw. When was the last time you closed a losing trade before it hit your stop, not out of fear, but because you knew you were wrong? Most traders never have. They wait for confirmation. They wait for the bounce. They wait for the miracle that never comes. And the irony is, the best traders in history are defined not by their wins, but by their exits. George Soros once said, "It's not whether you're right or wrong. It's how much money you make when you're right and how much you lose when you're wrong." You want the secret of professional trading? It's not prediction, it's surrender. The pros surrender faster than you do. They don't beg the market to turn. They accept that they might be wrong. And that acceptance frees them to win again tomorrow. But hope chains you to the past. Every time you refuse to close, you're saying, "I can't live with being wrong." That's ego, not strategy. That's pride, not patience. The market doesn't punish you for losing. It punishes you for staying lost. Here's what I want you to visualize. A surgeon in the middle of an operation. Something goes wrong. Blood pressure drops. He doesn't close his eyes and pray it reverses. He cuts. He acts. He adapts. Because hope in that moment is death. Trading is surgery on your own capital. If you hesitate, the patient dies. So next time you catch yourself whispering, come on, just one bounce, stop, breathe, close it, accept the pain now or pay interest on it later. This is the moment that separates survivors from victims. The market doesn't kill your account. Your refusal to surrender does. Let's bring this full circle. You started this video thinking it was about charts, but now you know it's about control. That quiet, invisible red flag, the moment you start hoping the market reverses, is your brain begging you to outsource responsibility. And that's the exact moment professionals step in and take it from you. So from now on, make this your mantra. If I'm hoping, I'm already wrong. Write it on a sticky note. Put it on your monitor. Say it out loud. Because when that whisper returns, and it will, you'll hear it differently. You'll feel the trap before you step in. Every great trader eventually learns this truth. Discipline isn't about control over the market. It's about control over yourself. When the market proves you wrong, close early, accept losses quickly. Protect your mind before your money. Because when the chart goes red, your real trade begins not with the price, but with your psychology. If this hit you hard, like it hit me the first time I learned it, hit like. Subscribe for more deep rewiring like this. And comment below with one phrase, no more hope. That's your declaration, your turning point, your first step toward trading like a professional. Next video, I'll show you exactly how to detect emotional bias before it costs you a single dollar, the system hedge fund traders use to audit their own psychology every week. Until then, remember, the market isn't your enemy, your hope is. And once you kill it, you finally start to win.